guys, what's up? Back again, another weekend, another video. So here we fucking are. Now this one, guys, is going to be purely about Bitcoin, about historical price action around these times. As we guys have been saying a lot of times, we've been very vocal about what happens every time between 2 months before halving and 2 months after halving.
What did we say then?
That those 4 months period, right, they get too turbulent, meaning everything can happen, but what usually happens, which we're gonna dive right into it right now, what usually happens is just sideways chop to the downside, and basically Bitcoin taking liquidity from altcoins, right? So that's basically what happens. We warned about this, and to be honest, we were fine with it. We have still strong altcoins. Our strongest performers, GHX, Realio, and we have had some nice performance that came along the way, such as Pano and 0KN USA. But those were more of a side dish type thing.
Yeah.
And basically 40 to I don't want to say 50, but 35 to 40% of our allocations were based on those two coins, right?
And that's for a reason, guys.
Yeah, and that's for a reason.
Where you see it play out here, right?
Yeah, exactly. And we see that those are just 50% from the top, which is a lot. I know for you guys, it's a lot, yes, because it needs to double in price to get back up there. But if you look at the majority of altcoins right there that are not in narrative or just basically have shit team, shit, whatever else we can say, team, tokenomics, chart, we can say a lot of things. Those are actually now minus 70%, minus 80%.
Yeah. And we have very small companies, if you look at it from a market cap standpoint.
Yeah.
And then you get bad news or delays or whatever. There can be more volatility, right?
Yeah.
So that's like the stadium of the market. It's just huge volatility.
Yeah.
And we already expected this volatility, but the intensity of the volatility, I think, has been increased a little bit if you compare it to the previous halving points.
Yeah, definitely, absolutely.
And that's because you think the ETFs?
Yeah, ETFs, definitely. We see a major buy wall at around 60k. Like, price does not close the weekly for now yet below 60k, which is, I think, something everyone should have actually a look at. And also, fundamentally, this past week, we have seen a lot of large institutions buying shit tons of Bitcoin, right? And announcing that they have Bitcoins on their balance sheets, right? So I think it's really crucial that we take note of that and actually comprehend the reason why they are doing that. But I think enough for this intro. We can jump right into the charts, and we'll talk first about what Robin is showing on the screen, and then we'll move on to what I have, which is also what Robin and I talked before what he's going to talk now. So Robin, do the honor.
Yeah, man. So we were in this trending channel downwards, right? Which I shared with you guys the past couple of weeks. And then we fell below this point, which was also predictable because this channel had just that structure. And then we broke out of the channel and we thought, okay, we're going up to 71k again. But what we said, guys, we need to claim this point of structure where we change the point of structure towards a bullish one. Mm-hmm. And what do we see? The strength of this trend of this price movement was way too weak, right? So we did not say, okay, it's definitely gonna break out. We just gave you the targets and say, okay, you need to reclaim this bullish structure, otherwise we go down. Mm-hmm. And what happened? There was a big dump of ETFs, and it got forcefully moved downwards, right? But that's what you always do. You have to, you can claim a certain behavior of the market, but also claim the criteria in which it will occur, right? So we say, okay, it will occur in this and in this scenario. And then what happened? Okay, it went down. So that was pretty safe bet. And of course, also on a micro level, do you want to really predict all this chopping of these past 2 months, right? Mm-hmm. I'm not sure if you want that. I'm more sure if you just be aware of the high time frame trends and the market trends, where are we moving to, who's adapting, what group is selling, right? Retail is selling, who's buying, okay, bigger institutions are buying. That's a very good trend. It's just a bigger shakeout, a bigger sentimental flip, for the the post halving months, right?
Yeah, absolutely. Yeah, and I think this is really important, right? Because on on the daily time frame, we'll still see that there's this downtrend still. We are still in that position of inverse head and shoulders, but it's sort of not really deviating yet, but we do really need to see a movement happening here soon. Otherwise, we're going to take the lows and then thereafter some further retest.
This liquidity point?
Yeah, definitely. Yeah, if it doesn't hold up, right? But I think it is now. I mean, maybe perhaps the right time to start talking about the what we found earlier in terms of SMA and whatnot. So you could perhaps show my screen on the left.
I got you, man.
I'm guys here with my MacBook as well, so we're like
multifunctional streaming.
Exactly. Less editing, more functional and efficient.
I see multiple types of charts, not only my charts.
Yeah, exactly. So here what we have is bull market support bands combined with the SMA, which is just basically the 9 EMA, but then on a simple basis, right? Now, we're going to compare this in a minute with historical transaction, but what we see here, right, is just basically what we saw right over here, correct? But then here's the halving, right? This line, guys, is the halving. And what we see is just basically a crash down, a pullback, then we got back up. We did a reverse, we did a bearish retest, and then we came back down to it, which took, by the way, a whole 2 months for this to happen. And then just started to go up, and then here we had a little deviation, and then started to go up.
To add to your tease, Omar, so once we lose the structure staying above the 8 or 9 week MA or this SMA, then we are likely to visit the bull market support band.
Yes.
If not, multiple times.
And multiple times, indeed.
Yeah.
That's the key, right, guys? Listen to that word, multiple times. Well, words, multiple times, right? And here's what we saw happening, right? So we broke down, boom. We went, we touched it, and now what do we have? We have a bearish retest. So perhaps if we do not touch it again, then we're going to go sideways until we start trending up again.
So be sure to add the simple moving average to your watch list of indicators, because it's like the little brother of support band. They work together.
Exactly. Now let's go back to the previous cycle, right? And we're going to go to the halving date, right? By the way, guys, this halving days, because of this is weekly time frame, it might differ from like 3 days max from the actual date of halving, but that shouldn't matter at all. But what we see here, right, it's exactly the same as we saw here on the top left, right? See this? And compare it with this, it's actually really the same. Just the crash of COVID, of course.
Yeah.
Now, what do we see? We went up, and then here we crashed. Boom. We compressed a lot here. This, by the way, guys, was almost 2 months, because every candle is a week. We compressed also 2 months, and then it started rallying.
And what will be the fundamental change of the Feds regarding quantitative easing, quantitative tightening?
So for you guys, there's this thing called QT, which is quantitative tightening, and QE, which is quantitative easing, right? Now, at the moment, Fed is doing QT, right? Quantitative tightening, which means basically they are selling all their bonds, their balance sheets to level out the markets, correct? Now, what you want to see happening is QE, meaning print money to pump the markets, to pump the economy, correct? And that's why the previous bull cycle, we went so fast to the upside, because of the COVID crash, the economy was shit, and it was literally just about to go to zero. So they turned on the printers, and then everything started to pump. Now, at the moment, as I said, we're on QT, but it's going to stop in June, which is basically next month. And then from there, boom, it's going to be a flat line until they decide to start cutting rates, meaning less rates, more loans, more money coming into the market.
And the flat line has always been the start of like the new impulse.
Exactly. But back to this, guys, if we go to the same cycle where we have been comparing this cycle to, which is the 2017 or 2016-18, right? What do we see here? A pump, right? Halving, dump. What do we see here? Exactly what we're having at the moment, right? Which is basically
It gets squeezed by the 8 EMA or 9 EMA with the support band.
Yes, right? And then we see a consolidation period between the SMA and the bull market support bands, and after that we get a huge rally.
And then 99% of the time you're just above this MA level, right?
Yeah, exactly. Let's do actually this so we can have it like side by side. Right, here we go. Now, This is
So
how
fucking similar, man.
yeah, this is but that's
Wow.
literally what I've been saying the whole time, you know, that this is actually a comparable chart, you know, 2017 2016 18 with
Wow.
now it's literally the same. Like I grabbed by accident the same fucking fractal.
Whoa.
It's insanely accurate,
It's
right?
multiple months of boring price action,
Exactly.
annoying everyone,
Exactly.
scaring their alts.
Yeah, and I think nobody said it in the chat already. That guys, just buy if you're gonna buy. Otherwise,
Yeah.
just forget about it. Go do your day-to-day stuff. Go work, save up some money, do
Yeah.
whatever you want. But if you can buy, do it, because within the next month, that money will be at least multiplied times 5. And this is literally the key right here. I know price action is boring. I know shit is dumping. But if you bought right when we bought stuff, then you should be at least 10 to 15x on profit, at least, at the very least.
Okay,
So-
to keep things conclusive, okay, we were looking at one development here, which I don't know if you guys know this, right?
Yeah, I taught him earlier. Because he didn't know.
I don't know if you guys know this. I know this, of course. I didn't actually.
No.
That's Ruko. Maybe you can touch on this one.
Yeah. So guys, this is LMX, right? If you look at the top right, where it says LMX, is it divided against what? Against real, correct?
Yo, yes.
What
yes,
is the
yes.
market cap of LMX right there?
Woohoo!
720 million,
Okay.
right? Now you
What
might
the fuck
say,
does that mean?
yeah. So LMX is the liquid mining fund of Realio, right? Which is basically a tokenized access to Bitcoin mining, right? So people can buy LMX, and therefore directly they are sort of investing on Bitcoin mining infrastructure, basically making passive income. Now, Realio has two sort of real world companies tokenized, which is their own company, Realio, and now this liquid mining fund, right? Now this quarter is also set to launch new real estate investment opportunities, and that's gonna come this quarter as well, which is what you guys are seeing from Robin here at the minute, right? Which is saying coming soon, all the way to the right. Now, the most interesting part about this is that if you do KYC, because this, guys, by the way, you need to do KYC on the platform to be able
No
to...
tax fraud, guys.
Exactly. This is not... see, this mask won't work there, so
No.
I have to do KYC, which I will be doing, by the way. Guys, you can provide liquidity for some juicy fucking APR. I think the latest one was around 360 something percent APR. But of course, the more people provide liquidity, the less the APR goes.
But the conclusive statement, they have three wildly successful segments, right?
Mhm.
Which one of them is going to launch soon.
Yeah.
This is already a wildly successful liquid mining fund, as you can see, right? This PA is beautiful.
Yep.
And of course, our main segment, Realio. And just a little candy, a little bonus, districts.
Yeah,
very
districts, which will definitely... Districts is what actually will cause the whole chain effect of their tokenomics, and will
Right.
put their tokenomics into some actual good work, just
Yep.
because of how everything works.
So guys, app.realio.fund or realio.fund could be the website you want to visit, make an account, register, right?
Yeah,
And
make KYC.
be sure to lock up some and get some nice APY reward for it. It's like 300 plus.
For now it's 360%, but it will get lower. But
Per year, right?
yeah, per year APR.
Yeah.
So it's APR, not APY, right? So you
Okay,
guys need to get it right. It's a annual percentage rate, and that can go lower or higher depending on the demand and depending on the people providing liquidity or not. So yeah, that's something guys really to keep an eye on. And GHX also just providing some mad value in the AI ecosystem and dipping. But yeah, my chart, guys, as you saw, if you can put it's
Quick, Omar.
this is literally a copy paste. If you actually look at the PA, it's literally a copy paste. I mean, look at this, bro. Look at here what happened. Look at fucking here what
We're
happened.
gonna make an art piece from this.
Yeah,
in the
listen.
future.
Yeah. And then in the office later, we can just print it and then put it on the wall or something.
Well, what does later mean? Like within a year?
Yeah, I would try. I'd like to say a year. Yeah.
Easy, guys.
I'd like to say a year. But this is guys something I want you to keep an eye on, and keep in mind, by the way, yeah, we have extra resistance here, because see, this is the all-time high, right? The former all-time high, and the all-time high here was still back here above. So the moment we break loose from here, and economies are actually to go and start doing well.
Yeah.
It's game over. But we need to survive this coming 2-3 months, and and then it's off. Then it's off the races.
And you see how solid we are in our explanation, in our theory, behind what we are saying, right? Multiple months ago, we were saying the same.
Yeah.
And you see all these Twitter guys, all these other groups changing their sentiment
Yeah.
every few weeks.
Oh yeah.
We never change our sentiment.
Nope.
It can be hard to swallow the truth, right? Sometimes,
Mm-hmm.
like last 2-3 videos, but it's the honest truth, and that's how we play it out, and that's how we're gonna make use profits.
Yeah, definitely. It's just about staying calm, making well-informed decisions, and that's about it. And if you study history, you guys already see it. You guys already see it on screen, but
Yeah.
it's there. It's there. It's not fugazi. It's
And the difference is other people are emotionally connected to the market.
Yeah.
We are only emotionally connected when it really pumps up, right?
Exactly.
Because you need it like money.
Yeah.
Right.
And then you put a 50-cent background music, and then you're good.
Yeah.
Yeah.
Alright.
Yeah.
I think I'll keep it short this.
Yeah,
this
I think
week.
for this time, right? I think people are pretty tired of crypto going down. So I think it's not that it's not hope. This is just pure data. This is just pure data which we're just feeding you, and this is exactly what's going to happen in the coming months. So if someone is telling you, "Oh, we're going to 30K," yeah, tell him to shut the fuck up and shove this chart up on his ass.
Yeah.
Or
tag
her-
him on Twitter.
Yeah, or her ass and whatever. No, yeah, Twitter is pretty toxic. So yeah.
Yeah.
But yeah, guys, this was it. Short, quick, Bitcoin price.
Exactly how they like it.
Yeah,
Right?
exactly how they like it. So yeah. All right, guys.
Alright,
Have a
man.
good one. Till the next one.
Bye, guys.